The crypto market is bleeding, again. Red charts everywhere. Bitcoin stumbling, Ethereum slipping, and Solana? Well, Solana is taking some of the hardest hits. But here's the question that everyone wants answered. Is this the time to panic? Or is this the golden opportunity to invest more in Solana while prices are down? Today, we're diving deep into why Solana is crashing, what's driving this volatility, and most importantly, whether now is the time to go all in, or sit this one out. Stay tuned, because by the end of this video, you'll see Solana's future in a way you've probably never looked at it before. The story of Solana has always been dramatic. From being hailed as an Ethereum killer, to experiencing multiple network outages, to staging massive comebacks with new partnerships and NFT adoption. But in 2025, the stakes feel higher than ever. The crypto market is entering one of the most uncertain periods we've seen in years. Interest rates remain stubborn, regulations are tightening, and institutional players are reshaping the game. And right in the middle of it all, Solana is at a crossroads. On one hand, it's been one of the most innovative and fastest growing blockchains. On the other hand, its price has been swinging like a roller coaster. So, what's the truth? Should investors see Solana's crash as a red flag? Or as a discount ticket to one of the most powerful ecosystems in crypto? When people talk about Solana today, they often frame it as a story of extremes. On one end, you have the excitement, the relentless optimism, and the promises of being the blockchain that could scale to mass adoption faster than any competitor. On the other end, you have the skepticism, the criticisms, and the constant reminders of outages, price crashes, and doubts about sustainability. And somewhere in between, there is reality, messy, complicated, and evolving. To understand whether Solana's crash is a reason to invest more or to run for the exits, you need to strip away the noise and look at the deeper forces at work. Let's begin with the bigger picture. Crypto markets live and die by cycles. These cycles are often brutal. They reward the patient and punish the emotional. Every few years, crypto enters a phase where prices rise far faster than fundamentals, attracting hordes of speculators. Then, inevitably, the air comes out of the bubble, leaving behind a landscape of collapsed projects, broken dreams, and prices that look like shadows of their former selves. But in the ashes, something important always remains: the builders. It's in these moments of despair and fear that the true test of a blockchain's resilience is revealed. Solana, in this sense, is being tested right now. Its price may have tumbled, its momentum may have slowed, but the question investors must ask is not whether it is falling today, but whether its foundations are strong enough to rise again tomorrow. To answer that, you need to understand what Solana really is, and why it captured so much attention in the first place. Solana was never just another blockchain. It promised something extraordinary: speed and scale at levels previously unimaginable in crypto. While Ethereum could handle roughly 15 to 30 transactions per second on its base layer, Solana claimed it could process tens of thousands. In some tests, it's handled over 65,000 per second. That number is astonishing in crypto terms, and it put Solana into conversations where people compared it not to other blockchains, but to Visa and MasterCard, the giants of global payment processing. This narrative, that Solana could one day support financial systems on par with the existing global infrastructure, was intoxicating. Investors flocked in, builders experimented, and communities blossomed. But speed alone is not enough. Solana's journey has also been marred by instability. Network outages plagued its early years. At one point, critics joked that Solana was the only blockchain that had working hours, because it seemed to go down so frequently. Each time this happened, Solana's credibility took a hit. But, and this is crucial, each time it also recovered. Updates were rolled out, bugs were patched, and the network continued to evolve. Today, outages are less common than before, and the team behind Solana has invested heavily in making its infrastructure more resilient. It is a reminder that no technology matures without pain. Now, let's tie this back to the crash. When markets turn bearish, investors don't focus on long-term potential. They focus on immediate risk. They ask questions like, can this project survive? Is the community still building? Will regulators shut it down? For Solana, these questions resurface every time its price drops. But if you zoom out, the answers are less dramatic than headlines suggest. Solana's developer activity remains strong, NFT projects continue to launch, and DeFi protocols are experimenting on the chain. Even during its lowest price points, the blockchain has processed millions of transactions daily. This is not the profile of a dead project. Of course, we need to acknowledge competition. Ethereum, with its massive community and ecosystem, remains the dominant force. Its transition to proof of stake and the rise of Layer 2 solutions have made it more scalable than before. Then there are new players like Aptos and Sway, backed by billions in venture capital, promising to be even faster and more efficient than Solana. This is the harsh reality of crypto. Innovation doesn't stop, and today's leader can quickly become tomorrow's underdog. But here's the thing. Solana has already proven it can build communities that stick. The NFT explosion on Solana wasn't a fluke. It showed that creators, collectors, and traders could find a home outside of Ethereum. This kind of cultural momentum is hard to replicate. And then there's the role of institutions. Over the past year, traditional finance has been inching closer to blockchain adoption. Payment giants, asset managers, and fintech firms are all experimenting with tokenization, stablecoins, and blockchain rails. For these players, scalability matters. If you're a global bank looking to tokenize assets worth billions or a payment processor handling millions of daily transactions, you need a chain that won't buckle under the pressure. Bitcoin is too slow for that. Ethereum, even with Layer 2s, still struggles with cost and congestion. Solana, however, offers a compelling proposition: low fees, high speed, and an improving reliability record. That's why it continues to attract institutional interest, even when retail investors are running scared. Crashes, then, must be viewed not just as dips in price but as stress tests of conviction. Think back to 2018, when Ethereum's price collapsed more than 90% from its all-time high. Critics declared it dead, said developers would abandon it, and proclaimed that newer blockchains would take its place. Yet Ethereum emerged stronger than ever, ushering in DeFi, NFTs, and a cultural shift that reshaped crypto. Solana, right now, is in a similar position. Its crash is brutal, yes. But crashes are also crucibles. They forge resilience, expose weaknesses, and prepare projects for the next wave. For investors, this creates a dilemma. On the one hand, Solana is risky. It faces technical challenges, fierce competition, and market volatility. On the other hand, it is undervalued compared to its potential. If Solana delivers on even half of its promises, mass adoption, institutional adoption, seamless scalability, today's prices could look laughably cheap in hindsight. That's why some of the smartest money in the space continues to accumulate Solana quietly during downturns. They're not buying for today, they're buying for what Solana could be 3 to 5 years from now. Another layer to consider is sentiment. Crypto markets are driven by psychology as much as by fundamentals. When prices are high, optimism feeds itself, and coins rise on waves of hype. When prices are low, fear dominates, and narratives shift toward collapse. But savvy investors know to fade extreme sentiment. When everyone believes crypto is dead, history shows it's often the best time to buy. Solana is currently stuck in this fear-driven cycle, and that's exactly why opportunities exist. The story of Solana is ultimately the story of belief. Do you believe that the world is moving toward decentralized, blockchain-based systems for finance, art, identity, and payments? Do you believe that scalability is one of the most critical bottlenecks in making that future possible? And do you believe that Solana, despite its flaws, has the technology, the community, and the persistence to play a role in that future? If your answer is yes, then the crash isn't a reason to flee, it's a reason to accumulate. But let's not sugarcoat the risks. Investing in Solana is not a guaranteed ticket to wealth. It is volatile, its ecosystem is still relatively young, and regulators are circling the industry with sharper eyes than ever before. Solana could fail. It could be overtaken. It could stumble under pressure. That's why every investor must weigh their risk tolerance carefully. But in the high-risk, high-reward world of crypto, The projects with the greatest potential often look scariest during crashes. Think of it this way. If you walked into a store and saw your favorite product discounted by 80%, would you panic and think the product is worthless? Or would you see it as a bargain? In crypto, discounts happen not because the underlying technology suddenly becomes useless, but because market sentiment swings violently. The trick is learning to separate sentiment from substance. Solana's substance remains intact. Its builders are still building, its users are still transacting, and its vision remains bold. Several NFT platforms continue to choose Solana as their home, and DeFi projects are quietly growing. On the flip side, regulatory chatter around staking and security classifications could create headwinds for the ecosystem. But perhaps the biggest signal is that while retail investors are panicking, institutions are not. Venture capital is still flowing into Solana-based projects. Payment giants are experimenting with Solana rails. That divergence tells you something important. The smartest money in the room still sees value in Solana, even as prices crash. So, should you invest more in Solana? Only you can answer that, based on your risk tolerance and belief in the future of Web3. But history has shown us one thing. In crypto, today's fear often becomes tomorrow's fortune. Thank you so much for spending your time with me today. I really appreciate you watching. If you found this useful, a like would be fantastic, and subscribing helps me keep creating content you'll hopefully enjoy. Please share your experiences and any questions in the comments. I always try to read and respond. Your support keeps this channel going. Until our next video, take care and have a wonderful day.